What's up, everybody? It's your boy, Brandon, back with another edition of the Macro Insights podcast. But first, before we get started, a little disclaimer. I am not a financial advisor, and the guest is not giving financial advice. So everything you hear on this podcast is strictly opinion and should not be taken as financial advice. We disclose if we have any holdings discussed in this podcast, and you should not be following us as financial advisors. You should discuss this with professionals before you get involved or invested. And as always, it's not financial advice. So please, please, please take this strictly as our opinions and for entertainment purposes only. Now let's get into the show. Plus, meeting tomorrow with the great Dr. Anas Alhajji. So, Dr. Anas, man, thanks for reaching out and wanting to conduct this space. How are you doing tonight?
I am tired already.
As I'm sure everybody who is anticipating this meeting is, but I guess I'll leave the floor to you. We can go ahead and get it rolling here. Obviously OPEC Plus has a big meeting tomorrow, so I'll leave it kind of broad and leave it open. Where do you want to get started? Go ahead and you obviously put out a great Substack article as well. So for those who have not checked that out just yet, I'm going to pin that as the first pinned tweet, and then as we go along, I'm going to be pinning tweets with some of the charts that Dr. Anas is describing, but in order to get the full breakdown as well, be sure to check out his Substack. So, Dr. Anas, the floor is yours.
Thank you very much. Hello, everyone. As you all know, OPEC is going to meet tomorrow, and there is a lot of chatter, a lot of things about this meeting. We published an article yesterday, and we reposted it today, about the possibilities and what's at stake at this article. I think this article is unique in several ways. I'm going to present some of its findings today. The issue that we are going to talk about today, it really, when I don't know why people are missing the main point. The main point is that this is a scheduled meeting, has nothing to do with the market, has nothing to do with the prices, has nothing to do with anything else. In OPEC statute, in the bylaws, OPEC members have to meet twice a year, and they usually meet in June and December. And that's the case for decades. They started meeting quarterly sometime a few years ago. And then after the crisis that we had in 2020, and after they decided to cut the 9.7 million barrels a day in April of 2020, they started the monthly meeting, which they stopped at the end of the year, and they reverted to the old 2 meetings a year. So this June meeting basically is one of those regular meetings. But the significance of it is, it was supposed to be virtual and a non-event. But they decided to do it in person because of the various issues in the market after the banking crisis. So the significance is really attendance in person, not the scheduled meeting. And if there was an emergency, they would have scheduled an extraordinary meeting last month or 2 months earlier, or during the financial crisis or the banking crisis, etc. So let's settle this point that this is a scheduled meeting. It gained significance because they changed it to an in-person meeting. And of course, we have the media hype and the media ban that gives it a lot of publicity. So between the media issues and the in-person meeting, people thought, well, this is a big meeting because there is a crisis in the oil market. There is not. just circumstantial events that led to this. So that's the first point. The second point is tomorrow we are going to have the committee meeting, the GMMC meeting, and the ministerial meeting. Usually when they put them all together and back to back, that means the decision is already made. It's going to be an easy meeting. It's going to be quick, etc., 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 which means that there were some secret meetings being done somewhere, or phone calls, or WhatsApp message, whatever. So the expectation for tomorrow is you have a GMMC meeting, looking at last time, basically the results from the GMMC basically were not even probably looked at. And it's going to be probably an easy, quick meeting after whatever negotiations been going on. The other related issue is that it looks like the White House probably already know about the results of the meeting, and that gives the impression probably they are favorable to the White House. So we will see. The issue with the media ban, I'm not going to get into the specifics of what happened and why, etc. But many of you know that many people in the media cross the red lines, and on the other side, they cross the red lines too. I mean, we are not going to deny that. But no one, or for those colleagues, especially on social media, who went on, I'm talking about some colleagues, mostly analysts, blaming OPEC and talking about freedom of the press. Look, talk about all the other reasons that it does not make sense for OPEC to do that. But don't talk about the freedom of press, because we know this is laughable. Even people cannot get to the White House unless they kind of conform to certain rules. So invoking the freedom of press does not make sense in this case. But the issue here is, because of the ban, we ended up with a problem that we did not have before. What is that problem? Historically, we always had leaks. Someone is going to say something, and a couple of journalists, or probably 10 of them, whatever, they will get information, different information from different people, and analysts will come in and connect the dots and come up with a picture before the meeting. But there will be leaks. But because of the ban, and they want to enforce the ban, it will be ironic if they have a ban, let's say on Bloomberg, and then Bloomberg comes up with the biggest and the best leak, which is a true story. It will be very embarrassing for OPEC Plus and those who instituted the ban, basically, to come up with a situation like this. And therefore, they have to contact everyone and emphasize, literally emphasize, tight lips. You cannot talk to anyone. You cannot respond to anything. You cannot. And therefore, others, in a sense, were banned too because of those three organizations. So the ban, although it's on three organizations, but because of the tight lips, people are not getting this. However, there are some news out there, through some friends, that they did meet with some media people and some analysts, and probably they preached to them whatever the messages they want to preach. We will see how it's going to play tomorrow, and whether those messages that we heard in the media since yesterday were the correct one, whether they're going to go for a million barrel cut, etc., or anything else. But I'm going to go through the details of that and talk about it. The other observation is, this is unfortunate. At a time when data deteriorated in the oil market, and of course the gas market relatively, when data deteriorated in the oil market, the media got fixated with the drama, and they did not focus on the real issues. When we talk about drama, for example, we are talking about Saudi Arabia, or the Saudi energy minister versus the speculators. They start talking about ouching. They start talking about Russia versus Saudi Arabia, Saudis losing market share, OPEC losing market share, etc. This is drama. But as you are going to see today, when I post those charts and you look at the details, you see why, in a sense, they missed a big story. Whether you want to talk about the oil market or you want to talk about OPEC decisions. This meeting, I call it the Catch-22 meeting. This is the label in my books. Basically, I'm referring to it as the Catch-22 meeting. A problem if they cut, a problem if they do not cut. And those both are truly big problems. First of all, to know whether they are going to cut or not, one way to look at it is to look at OPEC forecast itself. And you look at the latest OPEC report and find out what they are looking at. Because if OPEC report basically was not credible, then why OPEC is emphasizing it and producing it? So you look, and this is figure 1. This is OPEC estimate of global oil demand. You will see it in the nest in a minute. And if you look at OPEC estimate, these are quarterly estimates. It is 2022 versus, or 2023 versus 2022. And you can see, well, it will be, will you please post that, the demand chart, please?
Yep, you got it.
So what you see in that chart is you can see the actual increase in demand, and then in the next 2 quarters, Q3 and Q4, you see the OPEC forecasts. So we do have 22. Demand is way higher in 2023, but what is in this picture is that OPEC expects a massive increase in demand in the second half of 2023. So when I say massive, imagine this. It is from like almost 2.5 million barrels a day difference between Q2 and Q4. So you can see it in the nest right now. You can see that the dotted line, you can see the increase in oil demand. Then you look at the second chart, which is figure 2. It's an estimation of non-OPEC growth. Now, when we talk about models and we look at demand and supply, most of the models basically look at it this way, including OPEC. They estimate the global demand, and then they estimate non-OPEC production, and they look at the difference between the global demand and non-OPEC production. They conclude that the difference is what OPEC should produce. We call that the call on OPEC. Sorry, I mentioned this is figure 3, not figure 2. Figure 2 basically is just showing the estimate of global growth by the IEA, OPEC, and the EIA, which means that they support each other. All of them agree that there will be a very large growth in demand. Even now, they believe this case. So they support each other in this. Figure 3 basically shows the OPEC estimates of non-OPEC production, and they show an increase, but that increase in non-OPEC is way lower than the increase in demand, which means that OPEC share is larger in this case. Just for clarification purposes, for those who wants to get technical, when we talk about non-OPEC here, we are also adding OPEC, NGLs, and non-conventionals. And the reason why we are adding them, because NGLs are not part of the OPEC quota, but they are part of the demand anyway. So we have to add them up, okay? So the chart basically that you see, that's chart 3 or figure 3, that shows the bottom one, that's 2022. That's the non-OPEC production in 2022, and the upper one is in 2023. But that includes OPEC NGLs. So it's non-OPEC plus OPEC NGLs. The difference between those two, the demand and non-OPEC, those two charts, That's figure 5. Probably this is the most important chart you want to look at today when you look at the meeting tomorrow. So that's figure 5. We get the call on OPEC, what OPEC should produce in this case. And if you look at it, you will find out that the difference between them to keep everything the same, which means that keeping the inventories the same, OPEC has to increase production by almost 2 million barrels a day. But we know they're not going to do that because they already announced that all the cuts will continue to the end of 2023. So if you look at the chart in the nest right now, the red line, that's the call on OPEC based on our calculations from OPEC data in the report. And that difference is 188. That's between the production now they want to hold to the end of the year. We also assume that there will be some increase from Iraq and Nigeria here. So we assume they will produce 28.5. Of course, here we are talking about crude only. So if they maintain this to the end of the year, then we have that gap, which is 1.88. So all you got to do here is if you look at the area between the black dotted line and the red solid, the solid red line, if you look at that area, that means a decline in inventories that never happened in history. And it will never happen anyway, because we cannot afford to lose 285 million barrels from inventories, just a major decline that never happened before. Even we did not have even half of that, even in the worst years. Worst years, that means I'm talking about shortages. That means OPEC has no choice but to increase production sometime in the second half, because inventories are going to decline substantially, prices are going to skyrocket, OPEC will be under a lot of pressure, OPEC members start cheating and increasing production, and probably on their own, they will decide to increase production. So you can see from OPEC data itself, there is no problem in the market. There is based on their forecast, they are not supposed to cut production. But of course, there are other issues with that. So looking at the other issues, what are the other issues? If you talk to OPEC officials, various countries, etc., they will say the following, that prices declined in recent months because of the banking crisis and speculation. And inventories increased, and we will show that in a few minutes. And at the same time, it is very clear that there are issues and a lot of pressure to deliver a message to the oil shorts. These are the three main reasons for cutting. But they don't, in a sense, if you compare those reasons to the other reasons I mentioned earlier, given the forecast, the weight is different. There are overwhelming evidence in the absence of recession that they should cut production. But again, because of the issues of banking crisis, fear of recession, speculation, increasing inventories, etc., they might cut. The issue here is low prices and a message to the speculators. You can see the correlation between them. But if you look at increasing inventories, that's exactly on the opposite side. So again, when we talk about catch-22, we have serious problems here. So if you look at figure 6, figure 6 basically shows global oil inventories. Global oil inventories basically are rising. And on figure 6, basically on purpose, I put the chart on the left, starting from 3 million, and the chart on the right starting from 0. Will you add that chart, figure 6, please, to the nest?
Yep.
Thank you.
Yep. Give me 1 second.
So if you look at that chart, yes, global inventories are rising. This story of destocking basically is not supported yet. So inventories are rising. That means we have issues with the physical market, not with speculation and lower prices and the banking crisis, etc. That's a completely different story. If they want to cut, they can. There are several options for them to cut. The first one is to make the existing voluntary cuts formal and apply them to the whole group. Because the voluntary cuts, only some countries agreed to them, the others did not. The whole idea here is you make them formal, then you can follow up with them and demand countries to abide by the quota. And when you make it for the whole group, then the expectations on paper is a higher cut than before, but the difference is very small. So if they go for making the voluntary cuts formal, yeah, that will be additional cut, but the actual cut on the ground or the difference is very small. The second choice is expand the voluntary cuts by convincing other members to join, which means that there is nothing formal. They are just asking a couple of countries to join them on the voluntary cuts. I think this is a high possibility. But even if they do that, that's almost a non-event. No change from the past, but it's additional cut. At least they can claim that. The third option is to announce a formal cut on top of the 2 reductions announced in October 2022 and March 2023. There is an issue with that, is it does not make sense to go for a formal cut when you have a voluntary cut. But it is still an option anyway. The fourth option is to announce additional voluntary cuts by large producers led by Saudi Arabia. Here is one scenario that is highly likely. If they really want to burn speculators, and they are obsessed with the idea of burning speculators, regardless of what OPEC said, etc., because I'm going to go back to that catch-22 and explain. Regardless of all of that, if they decide to burn speculators or the shorts, what they can do is they can add a couple of countries to the voluntary cuts, and then Saudi Arabia and others can announce, let's say, 800 to 1 million voluntary cut, additional voluntary cut. And usually Saudis and others would deliver on most of it. They can really change the market with that, but it will still optional by the top producers, not a formal by the whole organization. But the likelihood is lower than the other one. Number 5 is to emphasize compliance, which would put pressure on some producers, such as Russia, to deepen their cuts. Again, these are the kind of the low-hanging fruit measures, and the impact is small, and it could be over time. And of course, we might see a combination of what I just said, kind of a combination of 3 or 4 of those together, but still it's highly unlikely to see a major cut given what I explained earlier about the views of OPEC. So here is the issue. Back to the inventories, because I'm going to emphasize this point. It's a really significant point. Will you please add that China chart, that figure 7, please? Why is catch-22? It's catch-22 because if they go for a significant cut, they do two things. First of all, they discredit OPEC as a research institution because OPEC has all this outlook that I just explained. And if they go for a significant cut, that means they don't believe a word of what's in that OPEC report. So they literally throw OPEC research under the bus. And that's a big problem. And if they go for that significant cut, they throw OPEC under the bus. But look at that chart in the nest. China's inventory has been increasing in recent weeks. And we know, as we learned in the past, China is going to use the SPR. China is going to use its inventories to make, at least to prevent prices from rising. It's going to use its inventories to even lower prices. So if they go for a significant cut to burn the speculators, they lose on the OPEC side and they lose on the China side. And if they do not cut, then oil prices will decline in June. And speculators will have a free ride for probably from a couple of weeks to 4 weeks or so. So they lose on this side. And then the media is going to go crazy how the Saudis and the Saudi energy minister lost the speculators and that ouching, etc. People start making fun of it, and etc., etc. So it is really catch-22. If they go for a cut, it's a problem. If they don't cut, it's a problem. Therefore, the only optimal solution basically is to go for something minor that appears like a cut, appears like, okay, prices are rising, etc., and that's it. The problem is with any of those soft actions, it will fade over time, and then we go back to the supply, demand, whatever you want to call it, fundamentals, etc., controlling the market. But the other issue is we are already hearing about the base month for the cut. As you all know, this was a big issue since the cuts were established, especially for the UAE. And there are some discussions on that. Will they change that? Well, since it's going to be a short meeting, probably not. It will be delayed. But think about this scenario. They might end up basically changing the base month for some countries, which means that now they can increase production. And then come up with the voluntary cuts to compensate for it, and therefore it's a status quo. What they get out of that? They get a big bang in the media that they did cut because most people do not understand what the base month is and how the base work. So the media will be obsessed with the idea of the cut, but actually there is no cut. It's a status quo because the country got a bigger quota, but now because they are voluntary cutting, it's the same thing. But what's the benefit of that? The benefit of it is they get the media hype out of it on one side. On the other side, the countries that get a change, they will benefit when production starts going up. Now their quota is way higher. So the reward is later on in this case. So if there is any discussion or any decision about the base, it probably will be matched with the voluntary cuts. To conclude, it is going to be a very difficult decision because of that catch-22. To kind of sum it up, if they cut significantly, they throw OPEC research and OPEC forecast under the bus, and they give the reasons to China to use its SPR and its commercial stocks. By the way, the total stocks of China today are higher than the total stocks of the United States. And they've been playing the market all along. In our note that we have on Substack, we ended up with the following statement, and I'm going to read it to you. In our opinion, talks should be held in Beijing, China, and not Vienna. Both Russia and Saudi Arabia have strong ties with China, and they must convince the giant Asian oil consumer to use its inventories wisely. In a sense, OPEC problem are not the speculators. OPEC problem are not the other OPEC members that they are meeting with in Vienna. OPEC problem today is China. So if they cut significantly, they burn the reputation of OPEC as a research institution, and they give the reasons for China to use the SPR. If they don't cut, speculators are going to have a free ride. The media is going to go after the Saudi prince and others because of the failure, especially after the ban. This is like it will come back with vengeance. And so the only way out, basically, and I'm talking about the optimal situation. They may not follow the optimal, and they have a long history where sometimes they did good and sometimes they did not. But the optimal solution basically is to come up with some artificial or small cut. Again, artificially, there are many games they can play to appear that they cut and shows the market that they are still the managers. I will end with this statement. If OPEC Plus is really serious about managing the market, and they want to burn speculators at the same time, they will have a significant cut tomorrow for only July. And then they will revert back to the monthly meetings, which means that the only way this major cut can work for July if they end up with the monthly meetings. If they have a major cut with no monthly meetings, it does not work. The impact will fade away quickly. And then we will see the same cycle back between the Saudis and the speculators. And since there is OPEC seminar in July, one way to impact or to affect the forward curve is to come up tomorrow and say, make either a small change or say, by the way, we are not going to make any decision. We will wait until July, because most of the ministers are going to be in Vienna anyway for OPEC seminar next month. So by saying we are going to meet in July, that means the sword next to the neck of speculators is still there, and they can threaten with it. How likely this to happen? This is just an idea. But the major issue, if OPEC Plus is really serious about managing the market and have a full control of it, they need to have a steep backwardation, and then they start the monthly meetings to maintain that steep backwardation forward. With that, I remind you that the both Substacks, the Daily Energy Report and the weekly, have the report that I've been talking about, and the charts that we showed today. Even if you want to go for a free subscription, please do. If you want to pay for it, that's nice. On the other side, we are going to publish something after the meeting, whatever the results are, and hopefully it will be a short meeting, and we will have plenty of time. Because of the time difference, we don't want it to last long, and then we don't want to stay late in the day to watch them. 2 points. For those listeners who are here for the first time or they just followed me recently, I tweet a lot of news and reports in Arabic. Most of the time, information that does not exist anywhere else. And Twitter has a translate function. So please use that translate function to see what we are talking about. And don't give up. If you see me kind of tweeting several tweets in Arabic and say, yeah, I'm going to unfollow this guy, seriously, there is a lot of information in those. You can just translate, use that translate to know at least what the headline is. The other issue that I would like to emphasize that when talking about the oil market and talking about OPEC meeting in particular, a lot of news comes out during the day, and most of the news are contradictory. And by the end of the day, when they had the conference event, the press conference, and they come up with the results, etc., what they agreed on, you'll see that they are completely different from what you've been hearing throughout the day. Luckily, it's a Sunday. The market is closed. You cannot trade on it. So don't waste your time just glued to the news for several hours until the meeting is over. It's been my experience that most of the news are incorrect. And you might have heard me before that most of the news leaks truly come from leaks when people leave the room to the bathroom, and someone will meet them on the stairs or somewhere on the road and on the way to the bathroom and ask them a question, and they say something, and all of a sudden it is all over the media. So yes, the news leaks come from leaks. So be careful with that. And the other issue is, and I saw some analysts basically saying this, and this is absolutely not correct. Journalists do not attend OPEC meetings. OPEC meetings are secret, only for the ministers and the delegates. The journalists basically are in the basement. The delegates are on the third floor. So only way basically is when people are leaving for bathroom break or whatever, or going to lunch, etc., they can talk to them. So the idea, because some analysts were saying, oh, they banned them from attending the proceedings. There are no proceedings. So journalists do not attend those meetings. They talk to them outside individually, and then they attend the press conference, and they get the formal results out of that. Brandon, I would be happy to take some questions.
Yeah, for sure. Thanks so much, Dr. Anas, for giving us that spiel and the full breakdown. Be sure to check out his Substack for all the articles. And sign up for the paid one. I got the article today. It's definitely worth it. And you'll see tomorrow that his predictions and what he's kind of describing about OPEC and OPEC Plus meetings are the best in the business. So be sure to tune in, and yeah, we'll be fielding some questions here. So be sure to request the mic, and you guys can come on up and ask Dr. Anas a couple questions. So on that note, I'll leave the floor open. If anybody has any questions, please request. And I know we do have one tweet of a a question here, so I'll ask that while we're waiting. Somebody asked, "What do you mean by total stocks of China are more than total stocks in U.S.?" So I'll leave you with that question, Dr. Anas.
If you take the total commercial stocks in China plus the SPR, the Strategic Petroleum Reserves, they are more than the total commercial stocks in the United States plus the SPR.
Awesome. Yeah, that's a great explanation. Thank you for answering that. Now we have Los Pollos Capital. What's up, man? How are you? Welcome. And give us a question here for Dr. Nas.
Hey, good evening, guys. Dr. Nas, I just wanted to say thank you. I've been following your work for quite some time, ever since I listened to you when you were on Eric Townsend's podcast. I believe that was 1 or 2 years ago. Just had one question regarding shale production, because I know that you've made a point in the past about crude quality and how significant it is and how it flows through into the downstream and refining capacity and what certain refineries can do and what others can't do. So my one major question is, if we do see a runoff in shale production as Tier 1 capacity rolls off, what type of implications do you see that having? Basically, what I'm getting at is, are you seeing in OPEC nations, for example, refining capacity that is more designed and more catered for more sour type crudes, like high sulfur contents, crudes that have or refineries that are more capable of hydro treating that being built out in there and other nations in preparation? Assuming that they kind of figure that out too. Thank you. Sorry, I know that was like a super long question, by the way.
All right. With refineries, we have already seen it. It already happened, and it's happening before our eyes. And I feel like I'm not supposed to talk about refining when Big Oren here in the room. If he would like to speak, he's welcome to. So we are already seeing it, and they are very complex refineries in Saudi Arabia, in China, India, all over the place. So we are already seeing that. We've written a report in 2010. Basically, that's when they announced the plans and the investment and the expenditures, etc., on several of those refineries. And our review at that time was, over time, we are going to see more competition in products than crude. And we see it today, that trend is already happening. Regarding shale, although I don't want to take the issue from OPEC discussion today, but I will answer it anyway because it is very important. The people who are writing off shale, they should be careful with that, because first we have to distinguish between growth and the level of production. If they want to write off growth, okay, I understand that. But to write off shale completely is complete nonsense. We are producing 8 million barrels a day. But we have a major issue that's been overlooked by analysts in the media, which we highlighted in our newsletter last week. What we've seen is companies, when they go to new areas and they drill, they end up in, and we've seen this since 2012, when they end up with gassy oil wells, they have a lot of NGLs and a lot of gas. That's bad, because the amount of money they generate from the well is way less than if the percentage of oil was way higher. But when you go to an area, everyone basically is suffering from the same issue: a lot of NGLs and a lot of gas. And what they do, because of the location, many times they ended up with negative prices for natural gas, NGLs relative to, as a percentage, NGLs prices as a percentage of WTI basically declines, and therefore their revenues decline. So what they do, it takes them 2 to 4 months to get out of that area, produce whatever they can, get out of that area, and move to an area with lower API. We've seen this few times in the past, and guess what? We started seeing it now. What does that mean? The implications are very serious. It means that even if shale production is flat, crude is going up, because the trend is there, and people can go to that Substack that we published. They can look at the data and see how API below 45 is going up. The problem is, when those companies keep expanding, whether they want to expand to a different zone or a different region, they end up with gassier areas. So I think this may not last long. They are going to go to some gassy area where they get, I mean, we already heard about the federal government lease, the recent one in New Mexico, which is one of the major problems for that NGLs and gas. And Devon basically paid a massive, $58,000 per acre, or for 1 acre. Anyway.
Yeah, I remember reading that.
The issue here is, this talk about shale does not make any sense. The quantity does not make any sense, because if we are talking about increase in production, the increase since the recovery after 2022 closures, all the increase basically was condensates. Okay? And then the argument about DUCs. A lot of nonsense about DUCs, because without knowing what the optimal level of DUCs for each company, and then we know what the optimal for the United States, there is no discussion about DUCs. And the reason why we ended up with massive number of DUCs, because companies went to some areas, they found out there is a lot of gas, a lot of NGLs, and they decided not to complete because they lose money. But after 2020, because of all the problems, they came back, They completed them. We ended up with a lot of NGLs and a lot of gas. And that gas saved Europe. Back to you.
Okay, so yeah, just a quick follow up, if you don't mind, Dr. Anas. Thank you. That's really insightful. So effectively, because I've been trying to put myself up to speed a little bit with the geologic implications of E&P and upstream and things of that nature. What you're essentially getting at is with the shales in particular, when they started breaking into new wells, it was effectively the lighter products just came to surface first. So it was your gas, it was your NGLs and things of that nature. And now, as you go deeper and deeper into said well, said reservoir, it's more crude, it's more heavier products such as crude. So as that continues, you're going to see like a lesser and lesser share of gas and a higher share of oil. So crude actually, in terms of like just crude production, is not going to really be affected in the short term from shale, but overall it will be. So that's implicit that gas production from shale is going to roll over, right? If I have that right.
Yes, but the impact, because the quantities are still relatively small, so the impact is not much. Focus on the Haynesville and look at the drop in production in the Haynesville, because that's really where the big story is.
Right. Got it. Thank you, Dr. Anas. Appreciate it.
Thank you. Brandon?
Yes, sir. All right. Yeah. Sorry about that. But yeah, great question. Great back and forth. We did have another request, but they dropped. So the floor is now open if anybody would like to take another question here for Dr. Anas. Yeah, if not, everything, I guess all the questions might have
You
been
have
answered.
one question on Twitter from Roman.
Yeah, I do see that. But we do have Jagameet Singh's burner account. So here we go. The floor is yours.
Thanks so much, and very nice to hear from you again, Dr. Anas. Really appreciate the content. I just have two questions. The first is, what's to stop the Chinese from using their SPR regardless of whether or not OPEC cut tomorrow? Like, would they use that anyway to affect the market? What are your thoughts on that?
The Chinese use the SPR and use their commercial inventories to manipulate the market in the last few years, and they will continue to do so. And the recent build in the Chinese inventories basically indicate that they are going to use it. And by the way, I think the chart above that shows the red chart that shows the Chinese inventories, it does not include what's underground in the caverns, which is probably about 125 to another 150 million above the level shown in the chart. So they have a lot of oil stored, and they can manipulate the market, releasing whatever amount they see suitable. And we've seen in 2021 in particular. Of course, we've seen it almost every year in the past, but 2021 was very clear because they used a massive amount of their SPR to prevent prices from rising. Their problem is, as their inventories declined, they thought they can buy the cheap oil seasonally when demand declines in the first quarter, but they ended up, they have their own catch-22, because according to all the indications that Putin was supposed to go to Ukraine in December 2022. But at that time, the Chinese had the Olympics and they don't want to mess it up. So they asked him to delay it. So he delayed it to February. But by that time, when they thought they can buy the oil cheaply, oil prices skyrocketed. So they couldn't. And then Russian oil got stuck. And we heard about the massive discount that took place. And the Chinese took advantage of it in a couple of ways. Now, their inventories were low. But what they did is, as you know, they have the lockdowns, so the demand was very low. At the same time, they imported massive amount of Russian crude at lower prices, so they were able to replenish their inventories. Back to you.
Thank you, Dr. Anas. And I was just thinking out loud, actually, I was thinking about this the other day, but the Russian price cap, in a way, was actually kind of very smart because it keeps Russian oil in the system, but at a reduced cost, which I think eventually, like, has the effect of keeping the cost of crude lower than it would be without that inventory. What do you expect long term? And do I have that thought correctly? I'd love to get some feedback on that.
The smart in a way, yes. The cap has no impact except making the Russian crude legal, but has no impact on prices, because all you got to do if you want to do the analysis is look at the shipping cost. By the way, the map does not give it justice. The distance between India and Russia, or China and Russia, from the northeast part of the world, when I say northeast relative to the United States, by the way, um, this is a big, massive distance, and the cost of shipping is massive. So you look at the cost of shipping, basically, you can see a match. The correlation is very high. Of course, to sell it, they need to give a bigger discount than the cost of shipping. But the idea that the cap worked, the cap never worked. The cap just made buying the Russian crude legal. Back to you.
Thank you so much, Dr. Anas. And again, appreciate the content and
You're welcome.
love everything you do.
Yep, thanks, Dr. Anas. Great question. Before we get to, I'm not even going to attempt. I'm sorry, I don't know how to read your name just yet, but I will ask one from the tweet thread here. They said, I recall Dr. Anas was bullish on second half. I appreciate it if you can elaborate a little bit more on this view.
Okay. Now, the chart we showed today, they show a large increase in demand in the second half, assuming there is no recession. We have not finished updating our outlook yet for the second half, but those who are interested, they can go back to our outlook that we published in early January and look at the charts and look at our forecast for the year. Based on what we have until now, the changes are very little. They are not big changes, kind of more of a refinement than major changes. So you can see that the demand, without a recession, the demand is going up and going up substantially. So we have an issue here, and that's why I said earlier that OPEC has no choice but to increase production in the second half and most likely in the fourth quarter, because the gap that we showed on the chart is over 285 million barrels. The gap is way too large to lower inventories to critical levels. So, yes, we remain bullish on the second half in the absence of recession. Brandon, the gentleman that you asked about his name is Naif.
There we go. So, Naif, the floor is yours. Feel free to unmute and ask Dr. Anas a question. Thank you for the help on the pronunciation there, Dr. Anas.
No problem. Thank you for having me. Good morning or good evening, Mr. Anas. And just to have a question, I see that the future contracts for oil prices are stable, and I see it until the end of the year at around $70. Will we see the oil price at 70? Is this the fair price for the Brent oil?
Okay, couple of comments. Let's avoid using the word fair because fair is literally does not mean anything. And I know some OPEC ministers and some politicians in the United States used it before. I think President Clinton used it before. It's really a meaningless word when we talk about fair. Let's talk about, like, is it the most suitable for the market, or we can talk about the optimal price, etc. Anyway, the futures market. If you look at the futures market, and there is a chart somewhere on in my account on Twitter showing the various forward curves versus the actual, the forward curves should not be used as forecasts. The forward curves have certain jobs in the market, but does not include forecasts. And therefore, we should not look at them that way. Because what you see as 70, by the time we get there, it could be 120. So
Okay.
the forward
Yeah.
curve basically has a certain job, but none of them, or certain jobs, but none of them are the forecasts. Thank you.
Just last questions. A rich country like Germany announced they are facing recession. Does this one, should we worry about it for the oil demand?
If this recession becomes a big problem for the EU, yes. Germany only, no, because their consumption of oil is relatively small and the decline is relatively small. So it's not a big deal. But if it goes through the EU and then from the EU goes to the United States and China, etc., then it becomes a big problem. Brandon?
All right. Yep. Let's take another. We'll do another question here from the crowd. The next question is if Dr. Anas has views on whether UAE quota and Russia, in parentheses, non-compliance will be addressed formally or informally tomorrow.
I don't know. But the ideas that mentioned, they are always subject to discussion. So whether private discussions or between two countries, etc., whether they are going to be addressed formally in front of the ministerial meeting or not, I don't know. But these issues are always there. We heard so many times about the UAE. They always confirmed. About Russia, they always promised. They never delivered. This time, we are already seeing some compliance by Russia. They are reducing their exports. We will see how it's going to work. I think one of the issues that, as I mentioned in the report, that probably the meeting should be in China, not in Vienna, because OPEC problem is China, it's not the others.
All right. Yep. Thank you, Dr. Anas, for that. We got Hourglass coming up to the stage. Hourglass, what's up? Do you have a question for Dr. Anas? See if he can get off mute or. Yep, there you go.
Yeah, how's it going, guys? Absolutely. I'm kind of new to the whole traditional market sector. I came sort of from crypto, honestly, when it comes to analyzing markets and everything. And I just wanted to ask you if how much is the oil sector sort of, maybe threatened is the wrong word, but how much is the oil sector sort of influenced by the technology sector? And basically, I'm meaning like more towards like electric cars. Is there sort of like a sort of threat to the oil sector because of
I got you.
electric cars? Yeah.
Yeah, I got you. You open a can of worms, by the way. The first issue here is we have a serious problem in the market in the definition of electric vehicles. Because all the reports you hear about, when you talk about 10 million and 30 million and 50 million electric vehicles, everything that moves is called a vehicle. Whether a scooter, motorcycle, tricycle, anything is called electric vehicle. So in China, if they converted 400,000 motorcycles to electric, or basically just get rid of the old ones and buy new electric, then they will report 400,000 electric vehicles. So that's number one. Number two, yes, electric vehicles, even in the real sense of like four-cylinder or the equivalent of four-cylinder and higher, is going to go up and is going to continue going up. But we have some issues here, and we discussed this in our newsletter last week when we talked about the investment report by the IEA and what our take from it, because the investment report was just amazing in various ways, because the IEA says that the cost of all the green technologies is going up, while we're being promised that they will continue going down, including the cost of batteries and electric vehicles. The cost of solar is going up. The cost of wind is going up. So that's one. At the same time, they said something that's really important and missing from the discussion, and the media ignored it probably by design. They said that to update the grid, this is only the grid, to update the grid to zero emissions or carbon neutral, we need $3.9 trillion. Trillion. And that's only for the grid. And then China, to be carbon neutral, it needs $85 trillion. China spent about 188 billion a year on green technology and various climate change policies, etc. 188. If you take the 85 trillion and divide it by 188 a year, China needs 211 years to be carbon neutral. So take those headlines basically and apply them to everything you want to talk about when you talk about the green technology. Our problem with electric vehicles is not the number of electric vehicles. Our problem is with the hype about the impact on oil demand. That's where the problem is. The hype is huge. And I mentioned in various spaces, including spaces with Green Candle here, that I worked on reports in 2008 on a province and cities in China that were converting everything oil-based to natural gas. And we're trying to estimate the loss in the oil demand and what is the gain in natural gas, because we were really interested in how much LNG China is going to import at that time. And we did the work. Later on, all we hear in the news that there is a province in China that's converted all its taxis and all its buses and everything else to oil, and that reduced oil demand by 350,000 barrels a day, etc. It's the same province that converted to gas. There was no oil in the first place, but they counted that as a decline in demand. Now we know that demand did not peak in 2019. It did not peak in 2020. It did not peak in 2021. It did not peak in 2022. And now we are hitting a new record. Why? Because of one of the reasons why, or one of the reasons for the failures of the forecast, because everyone was counting on the impact of electric vehicles in this province. But that province was using natural gas, CNG. It wasn't using oil in the first place. Back to you.
All right. That was. Do you have a follow up, Hourglass? Sorry.
Yeah, you're fine. No, not really. Honestly, I just thought it was very interesting.
All right. Awesome question. Thanks for coming up. We'll do one more from the crowd here before. Actually, we'll let LT the Colonel. Who Gerbachchin, maybe? I don't know.
Yes.
I'm sorry if
It's
I
okay.
botched
It
the
doesn't
name.
matter. It's the Russian thing.
I did my best.
No,
I did my
no issue.
best. But what do you got for
Yeah,
us?
I'd like to, thanks Dr. Nas for all these updates. I think it's very enlightening. I have a few questions. The first one is, what happened if the Ukraine war ends in some resolution by end of this year? And also, The second question is, if inflation is a catch-22, in a sense that the liberal and the democratic governments in Canada and US are using that as a way to push people into electric and nuclear and alternative energies. How is increasing the prices working for the OPEC? It's essentially working against them. And finally, if there is a worsening of, okay, never mind, just these two questions would be fine for the time being. Dr. Nas?
Dr.
Sorry.
Anas, you're on
What
mute.
was the first question about the resolution? Because your voice was going back and forth, so I did not
Oh, sure.
hear all of it.
Okay, I'll say again. My first point is that by end of this year, because before winter comes, I think either one of them want to get a resolution. What happens if the war is solved? How will that impact the OPEC's decision and the oil prices? That's the first question. And
Okay.
the second
So
question is, yeah, go ahead.
so
Go
you
ahead.
you are talking about the war?
Yes, Ukraine war.
Okay. The question basically, as we speak right now, we are already in the 11th round of sanctions on Russia. And probably by the end of the year, we'll be in round 14 or 15. Right now, even if the war continues for the next 5 years, it doesn't matter anymore. We know the shape of the trade that's going on in gas and oil. We know how the game of musical chairs are working. So this is not an issue. But suppose the war ends, we are not going to. The world will never be the same again. And the reason why, even if the Europeans want to go back and ask Russia for gas, the Russians do not want to depend on Europe. So the shift, some of the shift is permanent. That's it. So we will see more oil, more gas, that not going back to Europe at all. If you look at Algeria, for example, all the plans right now is for some replacement of Russian gas in Europe. If you look at the United States LNG, Qatar LNG, it's a replacement. This is a permanent replacement. And it's not that only the Europeans do not want it, it's the Russians do not want it. So that's number one. Regarding the impact of inflation, I think the liberals in the United States, Canada, and in Europe have already lost on several grounds. And the most important one is they lost on principles, because they said we don't want coal anymore. They went back to coal. They said no more subsidies for fossil fuels. They went back on the first. I mean, like the first cry. They just went back and reinstated subsidies on to consumers for fossil fuel, which led to a crisis. Why it led to crisis? Because with higher gasoline prices, with higher diesel prices, the public should reduce its demand, and therefore those countries can reduce their imports. But they decided to give people subsidies, and therefore, strangely enough, demand for gasoline in most of Europe increased in 2023. Look at it again. What they've done, they subsidized fossil fuel, and their consumption of fossil fuel increased. In what sector? The transportation sector. The transportation that they are trying to control through electric vehicles. Back to you, Brandon.
Yeah, I agree with you, Dr. Anas, with whatever you have said, because the liberals and the Democrats have changed everything. Now, what happens if Trump comes in and Polywear comes in Canada? Would that change? Because they're going to open up all their own oil fields more aggressively and the shales. Would that change the price of oil?
For Canada right now, this is the conclusion for Canada. It's all about the Trans Mountain Pipeline. And we have a couple of friends here with us. and one of them is LNGQE, who is well versed in LNG and Canada and all this stuff. They can tell you that this is between the Trans Mountain and between the forthcoming LNG trains. The landscape is going to change in Canada forever.
But if Trudeau
For
is
the
still
good, of
around, it's
course.
going to be a big problem.
For the
If
good.
Trudeau is still around. If
Yeah.
Oliver takes up, then I think it makes sense. But Trudeau is a problem.
Okay. Let's continue this discussion on the side and allow others to
Okay,
ask questions,
sure.
please.
All right, sure. Go ahead.
All right. Yep. We'll have Dr. Anas. I know I want to be cognizant of your time, so we'll have this one last question here from Jeffrey, and then we'll get it going, or then we'll let you sign off. And yeah, everybody, if you haven't already, check out Dr. Anas's Substack. It is the first pinned tweet here at this space. So, and if you're not already, give Dr. Anas a follow as well. Now, Jeffrey, welcome to the stage. What you got?
Hey, thanks, Green Candle, and Dr. Nos. Always a pleasure listening to you. Just got a quick question. What's your range for oil? What's the trading range that you see for the rest of 2023? That's a simple question, but I would love to know your trading range. Where does oil trade?
Yeah, unfortunately, I'm not going to say it. So sorry.
Okay, no worries, no worries.
Yeah. We still have a few minutes if you'd like, if there are any additional questions.
Yeah, if anybody has any other questions, please request the mic. Like I said before, please give Dr. Anas a follow. Check out his Substack. It's definitely worth it if you guys are considering. He has two different kinds of Substacks. One that is more for institutional type investors, and then the other that's more geared towards retail. So there's one for everybody here. And I think we have Hourglass, another question. And then Seeking Beto is also next as well. So if we have enough time, we'll get these last two in here. Hourglass, welcome back. You got a question?
Hey, thanks, man. Yeah, just wanted to ask, what's your kind of position on Anas? What's your kind of position on AI right now as it comes to the trade of oil? I have no idea how these guys collide. They're two different sectors for sure, but it's going to make a difference. So I just wanted to kind of collect some of your thoughts.
Kind of elaborate more on your question, because I just want to make sure that I'm hearing this correctly.
Yeah, it's a very general question, honestly, and just AI and how it's going to affect the oil industry.
Are you talking about artificial intelligence?
Yeah, absolutely.
Okay. If you look at the history of the industry, especially in the last 40, 45 years, of course, the industry for the last 120 years been cyclical, but for the last 45 years, we've seen the impact in a more profound way. And that affected the universities and what the universities are, the number of graduates and the size of the departments and the money coming to those departments. If you look at the top 5 universities in petroleum engineering and geology in the United States, for example, of course, there are a couple of them in Canada. What you see is during the good years, they get massive donations from the oil industry, and you see what the oil industry have done. Sadly enough, they spent more money on buildings than other things. And that's a big problem for me personally. Some of them basically paid for labs, etc., which was good. Some of them paid for some scholarships, that's fine. But what we've seen is there was a time, if you go back to 2015, for example, I am familiar with cases where students just walked out of the petroleum engineering department and they never come back, and the department was completely empty. And the chairman basically has to call everyone individually and beg them to come back. And some of them asked me basically to go talk to them about the future, etc., etc. With this, basically, we have many people who left the industry, some really great people left the industry with the intention of never coming back. So if you are a CEO, if you are a manager, if you are a leader in this industry, you have no choice but to think about robotics, to think about artificial intelligence, to think about how to substitute, because this industry is so cyclical that it's very hard to keep people, very hard to keep talent. And we've seen this trend for the last 20 years. I mean, if you look, people really do not give the oil industry its due respect. You want to talk about the use of robotics in the oceans at depths of 1,000 meters, etc. It was the oil industry that done that. It was the oil industry who paid for that technology. It was the oil industry that opened the doors for those to develop those technologies. And if you want to talk about even the various uses of control from a distance, etc., it was the oil industry that went to the farthest points in the oceans to have those rigs there. There was no other industry can do that. But now with the issues related to the human resources, they have no choice but to develop the technologies to replace people, which is good and sad at the same time. Back to you, Brandon.
Yeah, hey, to add to my question, if that's okay.
Go ahead.
Do you think the oil industry in general is decaying in value because of possible further technologies that are developing, something that could take place of oil developing? Do you think that that's the reason, like, we don't have any
Let's
like
flip this
high-speed
question.
rail
Let's
systems
flip
in
this question.
America?
Let's flip that question.
Yeah.
Some of the
What's
audience
up?
basically will be surprised to know that electric vehicles are older, way older than diesel and gasoline vehicles. People talk about the new technology of solar and wind. They are over 100 years old. Electric vehicles were very common around 1900 to 1915, 1918. In fact, one of the jokes people joke about was the wife of Henry Ford basically was driving an electric vehicle. So these things are old. They are not new. And the problem we are having
Exactly,
right
yeah.
now is we have some issues because everything, when you look at climate change policies and what the implications of them, it's funny because if you really fear climate change and you believe that climate change is going to wreak havoc on the weather and is going to make changes, you don't depend on the weather. It's that simple. So you fear climate change is going to cause those crises, and then you depend on solar, and then you depend on wind, and then you decide, oh, well, I'm going to take and build those wind turbines in the ocean where things are going to be really terrible. And everything they are directing us basically is going to depend on weather. I will tell you, one of the reports that we covered recently was on Chevron agreement with Toyota on developing biofuel for Toyota cars and supposed to reduce emissions by 40%. Where biofuels come from? From plants. Plants depend what? On what? On weather. So anything they are advocating, whether solar, wind, or biofuel, depends on weather. And weather is affected by the climate. So if you think it's going to be a disaster, why you are leading us to a disaster? So you see the illogical thinking in this. So when you talk about technology, look at the flip side too. One of the reasons why the energy crisis started in Europe, and it started months before the invasion of Ukraine, because wind stopped in the UK and natural gas prices went through the roof. And we ended up with 21 companies going bankrupt as a result. And that has nothing to do with Ukraine. Back to you.
All right, Dr. Anas, thank you so much. Do you have time for, I guess, at least one more question?
Yeah, we have 7 minutes, so we can stop at the top of the hour.
Okay, perfect. I believe Signal and Noise was next. So, all right, Signal and Noise, welcome to the space. What you got for us? Signal and Noise, can you hear us?
Yes, I can hear you. Can you hear me? Okay,
Yes,
cool.
there you go.
Thank you. Thanks a lot. Dr. Anas, first, thanks a lot for sharing your knowledge with us. I have two questions, if possible. You alluded to the fact that the Chinese SPR is quite large and they have actually the power of impacting the oil price. So, as far as the US SPR, I think you mentioned before that it had a profound impact on the oil price. Biden didn't release the oil price could have got to over $100 and so on. Now that I think the administration released half of the US SPR, if not more, do they still have this ability to impact the oil price? I'm talking about the US SPR, releasing it and so on.
Okay, that's the first question. What the second one?
The second one has to do with Canadian oil. There is a continuous delta, between the Canadian oil and Brent, of course, as well as WTI. Do you see that narrowing or going away with the Trans Mountain and that kind of infrastructure that is being built?
Okay. Regarding the SPR, China is going to use the SPR and China is going to manipulate prices. And therefore, we got to be very careful when we talk about 125 and those guys who are talking about 140, 50, etc. We got to be very careful. As long as China has this massive amount that we showed in the chart, they are going to use it. That's number one, regardless of what happened with Russia and Ukraine. For the US, we have a video that we published last November, still valid. Everything in it is still valid. For those who would like to check it out, you can just search my name and say SPR or something and you'll find it. The US can still dump on the market a large amount of oil. So if we have a crisis or we have, let's say, a hurricane in the Gulf of Mexico and some companies wanted some oil temporarily or to loan or to borrow, the government can loan them that amount without any problems. We have no problem with that. The amount of oil that will remain in the SPR is still large. We might end up with about 350 that we talked about last November, although we have the additional 26 million that's been withdrawn as we speak. So the US still have that choice. But what is the impact on prices? The impact of releasing 180 million over 6 months with a certain statement saying that we'll keep withdrawing from it is different from saying we are going to release 30 million or 26 million, which means that the impact of small releases is almost non-existent in this case. And the US is very hard to see 100 or 180 again, and therefore you can write off the impact of the US SPR, but you cannot write off the impact of China. The related issue to that is, and I know many of our colleagues in Canada being capitalizing on this, saying, oh, they are going to refill the SPR, and that's going to be bullish. Well, that's not the case. We already explained that in the video and several articles, because the refill, if there is any, is going to be at prices that are very low. Our estimate is going to be $43 for WTI or lower. And people have to realize that the price in the market is one thing, and the cost of oil at the facility is something else, and the difference between them is large. So the prices in the market have to be very low for the Biden administration or any future administration to refill. The amount is going to be small. Our estimate is that it will not exceed 90 million under any circumstances. but the ability, technically speaking, the ability to refill is very limited, which means that the 60 or 90 million is going to happen over a long period because of that limited ability to refill, and therefore the impact is very, very, very limited. Regarding Canada, the Trans Mountain is going to help. The LNG terminals are going to help. There will be some stranded assets that are owned by some companies, mostly international oil companies, and those stranded assets mostly are in northeastern Canada in the deep water. So those are simply, the environment there is extremely harsh, and the depth with the water current, etc., the cost is tremendous. So yes, there are resources there, and they are owned by some companies, or at least some companies got the licenses to drill there. I think those are the stranded assets, but none others. Back to you, Brandon.
Okay, thank you. Thanks a
You're
lot,
welcome.
doctor.
All right. Well, I think that is all for our time here with Dr. Ernas. So I really appreciate you coming on and sharing your knowledge before the OPEC Plus meeting tomorrow. I'm sure you'll be tweeting out some updates and everything like that. But in the meantime,
I'm going to go fishing. By the way, I'm not going to worry about any of the things until we get out the results, because of what I mentioned earlier. Again, leaks come from bathroom leaks. Sorry, I interrupted you.
There we go. Yeah, no, you're fine. I love that. Yeah, in the meantime, if you're not already following Dr. Ernas, please do, and check out his Substacks. Like I said earlier, there's one for everybody, either institutional or retail type investors. And I will also be putting this full recording on my YouTube probably tomorrow morning-ish time. So be on the lookout for that. And yeah, Dr. Ernas, if you've got any final words for us.
Yes, I would like to emphasize the point for the new followers that I tweet in Arabic. Please use the translate function to see what we are talking about. There are a lot of breaking news and reports that do not exist in other places. So please do so. And for the note after the meeting, we'll be publishing a small note just to sum up the meeting and the implications of it. And the other issue is on the Substack. We have two types of Substack. One of them is designed for institutional investors and high net worth individuals, and the other one is designed for everyone, individuals. It's only $420 a year. You get a daily report with charts and various views, etc. So we'll be happy to have your business.
Yep. Awesome. Great stuff. So yeah, like I said, follow Dr. Ernas and check all that out. And yeah, thanks everybody for tuning in. And yeah, sorry if we didn't get to your question, but yeah, Dr. Ernas, thank you so much.
Thank you very much. Thank you all.